The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday, market days between 11 o'clock and noon Eastern time, right at this time, of course. And great hosts, we have John Logan back. That's terrific to have John back. We missed him. He sounds a lot healthier and had no problem, and hopefully everything's resolved. So let's look at this market. Dow's up 111 at 17,774. S&P's up 15 at 2,094. Comp index is up 45 at 5,099. Gold is at this particular point down 6 at 11.35. Silver's down 25 cents at 15.31. You got platinum down, copper's down, crude oil's down. Bonds are down. Bonds are down 22.30 seconds and 155 and 23.30 seconds, but a full 97 cents in the 121.81 in the TLT, and it needs to hold the 121s. That's very important. My suspicion is if 121s can hold and it pushes back into the 124s over the coming 3 to 5 sessions, the market will be pulling back sharply, and if it starts to pull back under 121, there's going to be some support for the market. I'm just giving that relationship right now. I wanted to show this quickly. This is well, it doesn't have to be quickly, but I wanted to show it right away. The 10-minute E-mini chart, this is December future, had a left side, right side price time match. Remember the Chapman wave, you can do this without any technicals whatsoever. The technicals that I put in are only trend lines, arches, and cup formations. And I show the left side, right side price time match and the Chapman wave notation. The objective was from this level that I showed my subscribers this morning. I usually show just this chart right here, which has the daily. Sometimes I show the weekly. It's becoming more important now again to show the weekly because it's had such a stupendous move to the upside from the 1823 low that was made August the 24th. And then there was the arch formation right there, which turned out to be very positive because it broke above the left side high bar of 2011, sorry. And so I'll also show the 120-minute chart. And the 120-minute chart showed an arch formation that came down, retested the left side 2063-ish low, and then it had a very strong single leg up that's still on the way up. But the daily chart made an alternate count, an F/C. So we'll know in the next few days because there's still fund buying coming in. Don't forget, this is the end of the month, beginning of the month. That cycle that keeps coming back. It returns 12 times a year, and we'll see whether or not there's enough buying pressure to be able to keep this move going higher instead of what I'm anticipating, as I had last weekend, that there'd be the first few days of a consolidation. Here I'm expecting something a little different. I'm expecting some upside. And then I think towards the midweek, we start to pull back. So the stochastics at 92%, that is very strong. Reason why I only wanted to go specifically on the short side into areas that show that there could be some weakness or already are showing weakness or remaining in our short positions because those are the sectors that are the weakest. There was a good reason for that. At the same time, we also did some buying this morning in sectors that seem to be, at least for now, a little impervious to the market, any market weakness. We'll see if that's going to hold true. Here's the 10-minute chart once again. Let's go back to that. So I showed this chart earlier on. It was around about that time there. It was pulling back from a potential peak E/B. What happened was that became an alternate count, and we've now had, in fact, that could have been a peak F, because it had that left side support all the way back that became resistance all the way back to 2077.50 from 20 past 10 on the 30th of October. That was the resistance. Sorry, that was the support, and now it's become resistance. And that's what I showed. Once you break out of that, that's very positive. That becomes a Chapman wave cup and ladle breakout, and that says you can go to another D to the upside. In fact, I've got it here as a potential peak F/B. I'm beginning to think it's more like an F. And if I made this, for those of you who are technically inclined with the Chapman wave, that 20 to 7 Eastern time this morning, high of 2076.75, could have been F when we started a brand new buy signal right here and went peak A, B, C, and this is D. So either way, it's either a D or an F or an alternate count B. Doesn't matter what it is. At this particular point, we've made that exact 2088.25 in a shorter time span that had been indicated with a Chapman wave inside wedge target zone. In fact, it came in, instead of coming in by 10 past 2 this afternoon, it came in at 11:10 this morning. And what was it? It was an exact hit of the high today of 2088.25. It hit the high of Friday at 10 to 2 of 2088.25. So it's accomplished everything that it needs to, 100% participation rally, filling in every single quarter and going to the exact quarter of 2088.25 high to the 2088.25, because it trades in 25-cent increments, high today. So we'll see. Now it means that this is the period, if you've been long, you want to go short, this is probably the ideal time right now. I wouldn't even mess around. Even if though there could be an alternate count, you go to 2088, where was it? 2088.50, I'm done. So if you wanted a short, this is the time, but it would just be a 10-minute chart short. Why? Because the 120-minute chart has that single leg A, and it becomes very negative if it starts to trade under 2078 at some point today. And in the meantime, the technicals have rallied with the price. So we'll see. If you're looking at the technicals, they're on a technicals, MACD stochastic 9 EMA here. This is just a naked chart. So it's pretty much accomplished everything. And the other thing is, if you were long, you could just take a profit and say, hey, I'm done for the day. My thinking here is that it is going to pull back. That's the way I would trade it. But in the meantime, back at the ranch, let's go to our story. So this is what I wanted to show you. Let's take Facebook. This has been the ideal. This is the fund manager's teacher's pet. Why? It's not everything right. It plummeted in August, right down to the 72. What was it? 72 round number. Yep, 72 round number low. And it spiraled back over the 200-period moving average, and it went all the way to the last high of Thursday at 105.12 on the 29th. That is one heck of a move. That's 33 points. That's impressive. 33 points, 30%, over 30%. Nice. So now what we're looking at is some kind of a consolidation. And this is just typical. Look, here's the 120-minute chart, made a peak F. Let me pull this down. Leg E in the monthly, leg F/B in the weekly chart. Let it play out. If you are long Facebook and it's a long-term holding, my thinking is earnings Wednesday, I think. Thank you, Terry. My thinking is that as a long-term buy and hold, if you've been buying lower down, I tend not to mess around. I would try to keep that as a core position. I'd trade a short position, a short-term position, not short, but a short-term position against that, and just go in and out and in and out. But try to keep the long-term. I think as a long-term buy and hold, it should still stay in favor for most fund managers. So I wanted to show that because there are so many charts that were over the weekend when I was looking at them. I sent out a lot of charts to my subscribers and also told them what I'm thinking I'd like to do if there was a pullback and how I would deal with a pullback. And I'll go into that much more. This was just the starter essay to give some kind of indication. And here's Amazon at 622.93. On Friday, it screamed up to 630.72. And today, it's giving a little bit of that back. It looks just a little tight to me. A, B, C, D, E, F in the 120-minute chart. I think that we're looking for some kind of a pullback. Yeah, at least I'm anticipating that, regardless of longs or shorts. I am anticipating that. So, and look at Google, G-O-O-G. I don't know if this is the way out. Google made a peak F-top at 7:30, round number high, gone to the sideways formation. It isn't on the 120-minute chart doing what it should. It should have gone to an inside buy mode, which says that this is A, that's B, that's C, and it should go to a D. It's not acting that great. So I'm thinking that even Google on a shorter term, I wouldn't say intermediate term, I'd say near term to short term. Now we're talking a week or two. It should be pulling back here. And I wouldn't be surprised if it did that. Okay, a couple of things I wanted to look at today. Let me see, I wrote down because I always forget to look at what I wrote. Yes, you remember on Friday I was looking at the banks and I said, I like the banks. I think on a very short-term basis, they might be a little bit overbought. You've got 24.55 in the XLF, the S&P Select Financial Spider Fund, holding the 9-period moving average. Nothing wrong with that. MACD's good. Stochastics pulling back, but still at 87%. On-balance volume is pulling back. I'm thinking that this is telling us a huge story. And over the next 3 to 5 weeks, going into early December, my thinking here is that if the XLF, under the worst conditions, it's at 24.30. If it's able to hold, as I say, under the worst conditions, if there is a big tumble in the market, but if XLF can hold above 22, preferably I'd like to say 22.50, but let's make it 22. That was the low. Let's get the exact number. The low of October the 2nd was 21.98. So yeah, if it holds in the 22s all the way through any rotational correction that we might have over the next week or so, that'll be very impressive. If it doesn't even break 23.50, but in fact it even sneaks to another high, I shouldn't use the word sneak. It's not doing any sneaking here. It's just trading in a rectangle formation now at the upper end. So if it manages to push towards 24.73 by this coming Wednesday or Thursday, I just have to say I'm impressed. I am very impressed. And if it pulls back, as I say, I'll still be impressed if it holds at 22s. That's if the general market takes an 8% tumble. If it does that, we'll see. We're in a very interesting period right now for a couple of reasons, but the most important reason is that we've seen that bonds, USD, US there, that bonds have been pulling back down 22-30 seconds, still within a range. I've drawn in the arch formations that keep unfolding, and it makes on a shorter term situation, 154.23 is a 200-period exponential moving average. You close below that, and bonds will make yet another H pulling back. And that's going to say, hey, mister, this is time for you to really take a good gander at the huge multi-decade up channel. So Piki and Dan is asking, Basil, you think Fed rate hike will boost the XLF? You know, that's a really good question. And I've looked at, over the weekend, I did a number of different things, but I also did, I should just mention, I don't know if it was the last performance. I hope it wasn't the last performance. But yesterday we went to see the Boston Ballet playing Gustav Mahler's Symphony No. 3. The entire thing, unbelievably beautifully played by the Boston Ballet Orchestra. And the dancing was impeccable. What a beautiful choreography. That'll take me to the answer.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Dow's up 82, S&P's up 12, and the relationship of the Boston Ballet to bonds was that I actually looked down at the page that I meant to talk about it last week on Friday. So I just hope it's not. I got a feeling now that was the last performance, but it was. I hope not. It was just fantastic. It was one of the absolute highlights of the artistic world, I'm sure, here in the Boston area for quite some time. A couple of things I want to talk about in terms of the bonds is that the bonds, you see, when I look at the yields, I wonder if I can get rid of this here. Let me get rid of this art. Close the workspace. Let me show you something. In the bonds, I go back to my weekly chart, the triple yield chart that has the 30-year, 10-year, and 5-year, which I show my subscribers most weeks. That went back to being stuck in the range. And this being stuck in the range says that to make it real simple, the 30-year weekly chart shows 29.53 up 20 cents as the yield, the 30-year white bar chart right here. With a high of 32.55 back in June, it pulls back and it goes to 26.25 in August. And then it rallies and it stops dead at that line that I've had here for ages. Look at that horizontal line. We've been here so many times. You see, rates are really not an issue right now. It is not the rate itself, but it is the effort to sustain the direction of the move that's going to be the big thing. And if the Fed starts to push and say, no, we are inclined, we are definitely December, we're going to raise the rates, we might see an anticipation of that. That's the whole thing. as certain factors come into play, and that's different because what will happen is it will take out 30.92, the high of the week of the 18th of September, and then all of a sudden you've got a new leg B, and that's going to look very much like it wants to retest the 32.55 area. Now it looks like the H goes to an M pattern, and all we're doing is staying in the trading range. My thinking is the trading range is going to continue for a while longer. So, and a good point in the den, XLU might give a clue to the rate. So let's look at the XLU. The XLU has had quite a ride this year, actually one of the biggest rides in quite some time. Look, it's just been, it looks in this particular chart here, going back to the beginning of 2015, you've got a high of 49.78 back in January, and it comes, this is utilities, this is a big deal. It comes all the way to 40.52. So a 10 point pullback, that's 19%, almost 20%. You've got a S&P Select Utility Spider Fund that's saying, I am stuck in a range. I will define that range much clearer if I start to close in the 47s. That's up 4 points from here, 3.5 points. Or I break down and I take out 40.07. That'll say, uh-oh, this is a change of significance in the monthly chart. But in the meantime, it's just stuck in the range. I'm not going to get carried away until things happen. So let's go back to our story. So in the question that keeps coming up, look, I'm going to crude oil. CL right now, just stuck in a little bit of a range towards the lower end in the cup formation in the weekly, haven't gone to a peak B. It's just that H pattern that goes to a lowercase m pattern is just, it repeats over and over. That's what it's doing. So crude oil is just stuck in a range. If I go to C, that is corn, continuous contract. Don't tell me I lost. No, I haven't lost the notation. There's that single leg A up that fails right there. Whoosh to the upside, and then it plunges to the downside. Now what we're looking at is that corn looks like it's trying to head towards the lower range at 376.5. Looks like it's going to test the 372 low will be tested. If that's taken out, 368 looks like the next level of support, and it has to by Wednesday, by Thursday or Friday, without taking out 375, 372 support. It needs to climb quickly to the 386 level and take out the high of 387.5 of just 4 or 5 days ago. That's corn. Look at wheat, stuck. Had a really nice rally, but still stuck in a trading band, and in the weekly chart, monthly chart still looks terrible. So this is saying that wheat needs to try to get to at 507.5. It needs to get to 515 to 517 quite soon, so that the 525 200 period moving average becomes a magnet. Just kind of stuck at this particular point. Feeder cattle. You know, I just say spend a moment just running through this quickly. Feeder cattle made, this is a feeder cattle continuous contract, made a peak D in the Chapman wave. Nope. A, B, C, D, E. Made a peak E in the Chapman wave. And it's really trying to hold and go sideways. It has the same thing with the 200 period moving average of 189. It really needs to push above last Thursday's high of 185.95. It needs to get to the 186s, and quite soon, to say, hey, I've still got strength here. Don't just think of me as having a sideways consolidation. And that's kind of going with all the themes of the commodities, sideways to down. I'll be back. Basil Chapman, Tiger Technicians Hour. Dow's up 88.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So I'm looking at that 10-minute E-mini. Look at it. They're just stuck. Held the trend lines and the parameters to watch are really important, very short term. A close, but 2 closes of the 10-minute chart below 2084 would suggest that it's going down for a real quick test of the 2081.75 low that was made at 20 past 10. And if there is, I don't think it can happen, but it's going to try maybe, but a close above 208825 would suggest it's attempting to turn this whole area into an area of support. So that's what we're watching here on the short term. I had a couple of questions. I'll go backwards here. SOCL, which is a Global X Social Media Index ETF, made an IPO back in 2011 in November in the 14s, and then it plunged down to the 1181 area in November of 2012, a year later, and then it soars in a peak A, B, C, D, bam. It goes all the way from the under 12 to 23 round number high. Oh, these round numbers, man, they're important. In a monthly chart, a round number high is really important. High, and then it plummets down to the 15 area. So let me just put that in red. And now we're looking at the most recent low of 1520. That was the August 24th low, I believe. 15, is it? I must just double check. You can't take things for granted. I think it is. Yep, there it is. August the 24th, 1520 was the low. And it's gone from 1520 to the 19s. Nice move to the upside. So the question was, have a look at it because we're talking about Facebook, and this is Global Social Media Index ETF. I forgot about that. I used to follow it, and then I didn't do anything. SOCL. That's Global Social Media, just writing this down, ETF. Good. Okay, so it's doing very nicely. It looks like it's going to make a leg D just above 1944, and then you've got to be a little bit careful, even a double top, and then that whole area between 1918 and 1893. I'd even go down to this line right here of 1869, let's call it 1870. That becomes the area of support we have to monitor. Why? Couple of reasons. On the daily, you've gone above the 200-period moving average, so that needs to be tested as support rather than resistance. And the 9-period moving average in the weekly is at 1880. So thank you for bringing it to my attention. And now let's go to the next thing. So when I'm looking at these different sectors, there are a couple of sectors that are really doing well. We were very lucky to get one this morning, and it's doing quite nice from our entry price, but it's in a sector that was really beaten down. And unfortunately, we just missed getting back into AK Steel. Just missed it by a couple of pennies, and that's a pity because they had a very nice move. It's up 4.33% at $3.02. Just a starter position because it's looking to me like it's attempting to form some kind of a base. It might have to do backing and filling between 320s and 260s over a period of a couple of weeks. We're going to watch this one real closely. So, and then I want you to also go back to the bonds and say, in the bonds, 154 has to be the 200-period exponential moving support that must hold. In the TLT, that would be the equivalent of now underneath the 200-period moving average, but that's not the point. The point is that it's turning that area both into a magnet, and even if there's a pullback, it should attempt to get back to the 123.30s in the 123.30s, yes. I'm sorry, I should have said 122.30s in the 200-period moving average on the weekly chart of the TLT. But there is an H pattern that says, just watch out, because if 121 support is taken out, you can have a 1-to-1 to the downside and have an arch formation retest of the low that was made on the 16th of September at 118.55. So I just wanted to say that 118.55. I wanted to say that the patterns I'm looking at here really haven't changed very much. What has changed is that there's now support in areas that were very, very weak before. And if you're looking at something, say, in the cloud, cloud, let's call it cloud computing, A, B, and starts, and it goes A, B, C, D, E. Yeah, this is acting quite well. We're looking at First Trust, ISE, Cloud Computing. This is a very nice chart, and it's suggesting the slowness of the move to the upside could be forming some kind of a shorter-term arch formation above the previous arch formation, and that essentially says, hey, this is nice action, steady but nice, and if there's any break, it's at 30.56 up 16 cents SKYY. If there is a break in the next 2 to 3 weeks and there's a close under 29, that would suggest you got to be a little careful because it could be a deeper pullback of time and some points, but mostly in time. Okay, so that's Sky. Now, I was thinking when I was looking at the HGX index, which we spent some time on last week, that is turning the 200-period exponential moving average of 227.50s into support. Instead of arching over and breaking that candle of the 27th, the low of 226.32, here it is, trying to attack a new recovery high. So I'm kind of impressed. I'm kind of impressed with the rates a little bit higher in the housing market, that the HGX, Philadelphia Housing Sector Index, is actually doing quite well. Nothing if you're looking at the weekly chart. This is just a sideways move, but the daily chart really is quite good. Now let's look at this. This is Home Depot to do with the home builders. See, that's pulling back. that's had its move to the upside to a peak E and a double doji top. And what I'm looking at in Home Depot at 123.74 up 10 cents is that if this candle's low of 122.22 is taken out the candle of the 28th of October, you have to be very careful because it could be a real sudden move as the low of 119.56, the low of October the 14th gets tested. And that would say to me that the weight of evidence right now is suggesting that that sector is still consolidating. Weekly chart's still very good, but consolidating. And most importantly, that smash of 92.17 on the 24th, when it was trading just the day before with a low of 116. I mean, we're talking a whopper of a move down 24 points. Yeah, that is big. And that's suggesting that I've got to take note of this candle. But at the same time, the fact that we haven't traded even into the body of the candle, the low of the body of the candle, that open of 110.05, even on that pullback on the 29th of September, it went to 111.80. This is fulfilling the upside. It's kind of pretty much done that now. Now we're going to be watching something like a Home Depot really closely. If I look at the IWM, I'm expecting a leg D. Remember leg body? We spoke the other day. We had a little chat about it, looking at the chart formations. And when I think it was it Mark looking at the IWM? I think it was Mark looking at the IWM. That's one of the things we looked at, that there's a chance that we could start a move to the upside, which would take it above IWM at 116.64 up $1.30. Needs to take out 117.14, the high of the 28th, and that'll start the neck formation. And so, yes, that's it. Now, a couple of things that I needed to look at. I asked the question last week. It wasn't over the weekend. It was during the end of last week. I was speaking to someone. I said, hey, I'm going to ask you a question. What stock do you think is doing better, McDonald's or Whole Foods Market? I never even finished the sentence. Whole Foods Market, of course. I said, oh, okay. Here's McDonald's. It made, look at this, it made an all-time high just the other day. It went to peak F/B, looks like an F at this particular point, at 113.96 on the 26th of October. Wait a minute. Whole Foods Market, the epitome, the leader, the health food guru, anticipator, did everything right. Hasn't done it right for most of 2015 since the since the October of 2015 high, 2013 high, that was at 65.59. It's trading less than half. It's at 30.27 right now, having made a lower low today, a multi-year low. So this is very interesting, isn't it? So that means that this is just another way of looking at the market and saying, whatever I expect might not be happening in the market. The market has a mind of its own. Here's ExxonMobil. In this environment, when you go to the gas pump and gas prices are so low, here it is, just recycled up. Is this F or is this a brand new leg? I don't know. It's a real tough one. I'm calling it F4 now, but it's above the 200-period moving average. ExxonMobil coming back very nicely. Monthly chart needs a lot of work, but it has had a huge improvement. And the weekly chart is over the doji candle of last week. And it's got a Chapman wave squash here. And it fulfilled that Elliott wave, well, it's a Chapman wave analysis interpretation of Elliott wave, which went 1, 2, 3, 4. And then I spoke about this earlier in the year. I said, it's in the summertime, I said, I think Elliott wave, Exxon's gone to Elliott 5. I'm anticipating a rally, but it's more a rally, kind of a bounce than a major turnaround. At least that's what I'm thinking. But you want to know something? It's looking darn good. So that's ExxonMobil. Another one is when I'm looking at CVX. Oh, That takes me to the next thing. CVX just broke out today. I think they have earnings day or something. Looks really good. And the weekly chart has now improved enough to say that this could be leg. Oh, it didn't know. 91.93, 91.98. This is still leg B. Wow. There as well. Elliott Wave 5 and now it's having this extremely strong bounce. Nice action in Chevron and Exxon. Visa. Now, Jennifer from Wells had called, and we spent a whole bunch of time talking about it. And my thinking was that in the longer term, it looks really good, but it was bumping to some kind of resistance. And that I wasn't sure that at 78, 89, it was going to go that much higher. At the same time, I had suggested maybe either taking something off right then, or maybe having a trading stop so that you do get something taken out to reward yourself for being in it, and then for being correct. And then we'll deal with the pullback. Well, they're taking over some company in Europe, I think. I'm looking at it and I think it's a little tired. It's a little tired and I think it's going to have a little timeout. And what I'd also recommended that hold off doing anything with it, anything you take off, because it made a peak in the 120-minute chart. But somewhere, I believe the price that I looked at was somewhere between the 73.20 and 72.20 area. How that holds is going to be very important, because if it breaks down 69.19, it's a 200-period moving average. But I would dedicate probably some of that money that you've taken off the profit to putting it back. And I want to see how it holds somewhere in the 72s. But if it takes out 72, I'm going to have to just wait and have patience, because the 200-period moving average is 69.19. So Visa pretty much done with this move. I don't know if the earnings have come out yet. Maybe someone in the den can tell me. But if the earnings say, I can tell you right now. Trade station. Let's go straight to news. Go to the news. Say OK. And waiting. Visa. Shire, the latest adding to merger frenzy. Mid-morning market update. Visa posts rise in Q4 earnings, agrees to acquire. Oh, okay. It was all today. Oh, a whole bunch of news. And the news was received not that favorably. So let's just see how it rests for a little bit. And we'll be able to get into it in greater detail. I think there are a couple of things that are telling us here that the market is a little bit tired. It's had a spectacular run, and don't be surprised if there's a rotation. Some sectors suddenly come on strong when they've been very weak, and now some of them are going to act in a different way. They're going to possibly start to pull back a little bit, and that little bit is going to be the big test of internal strength. C1, peak C2, starts to move, and this could be A, B, C, D. All right, so what we're looking at is Alta was the next one that was brought up, C, D. And that's pulling back a bit. It's down at 172, down 1.96 and 1.13%. And it didn't take out the old high that was back in August, where it went to 176.77. This is what I'm looking at here. That some of these stocks, by any measure, look, this is going to a leg D. It hasn't gone to the D. It should try to take out that high of 176.77. It should try. It doesn't have to, but it should try. But I'm thinking that this is just in a consolidation. A lot of stocks are consolidating after huge gains. They deserve it. There's nothing wrong with that. Now I'm going to check. When we get back, I'll talk a little bit about my thinking about what's going on and what should happen for the next couple of months. I'll be back. Basil Chapman, Target at 50's hour. Dow's up 80, S&P's up 1296.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi everyone, Basil Chapman. So we're back. Dow's up 88, S&P's up 13. I had a bunch of questions, and I think I'll go right to the heart of it. The questions were, well, what are you thinking? Because in your Trader's Corner, that's this morning's Trader's Corner, you talk about short positions, you talk about long positions, you talk about waiting for a pullback, you talk about a bunch of things. Well, my thinking here is this. That on a very short-term basis, I believe we're getting a little bit toppy. Here's the New York Stock Exchange, what I sent out, one of the dozen charts or something I sent out to my subscribers starting on Saturday morning. This is what we're looking at. The New York Stock Exchange held that monthly chart, beautiful inside track support level. It's bumping up against the 9-period exponential moving average. New York Stock Exchange, this is 2,000 stocks. This is a very broad index, so this is a good one to look at. It hasn't recovered anywhere close to the Dow and the S&P or the QQQ, which was within pennies of its all-time high. I'll have to check that out in a moment. So what I'm looking at here is I believe that we're going through some kind of a little rotational consolidation. It's actually started Friday, and it should continue maybe into this week. And that's saying that the upside at this particular point might be somewhat limited, and the downside is not that limited, but it is limited in time to a shorter term time frame. This is just the way I'm looking at it right now. I might have to change that, but that's kind of what I'm looking at. And it's saying that this arch formation that's forming in the New York Stock Exchange would have a sideways consolidation going from 10,460 area. Maybe the 9-period moving, the 200-period moving average is up at the 10,000. I think it's 10,005. Let me actually, this is what I wrote to the subscriber. Let me just do it in real time here. New York Stock Exchange. I'll get rid of ADS, which is Alliance Data. Great looking chart. Let me just get rid of that. And we're looking at the NYA.X. There we go. So now what we're looking at is the 10,590. It's called 10,600 level is resistance. So we could go sideways here for a little while. So the question was, wait a minute, you're talking about the IWM still going to a leg D, and then you're talking about maybe getting a short position if certain conditions are met on the indexes, that is. Yeah, absolutely, because we've got this rotation going on. Basically, what I'm looking at is that the New York Stock Exchange is stuck in a range and has strong downtrend resistance line, and that comes in at the 10,600 level, which turns out also to be the 200-period moving average. So I do see some resistance there. On the downside, I see quite good support, but I do see time more than price on the downside if we do slide. So we go to the IWM, and this is all we need to see. It's at 116.52. All it needs is 117.14. So it's what, 50-something cents? And then 50-something cents to the upside, and you're in leg D, and then all of a sudden that 118.30s becomes both a magnet and a barrier, all right, a repellent zone. So I am looking at this as a consolidation phase, and that I don't see any reason why on a separate theme you could be wanting to treat the downside not as a buying opportunity yet, but very soon to treat it as a buying opportunity. And as it's coming down, you may as well, if you can time it correctly, be on the short side. Although the rotational aspect is saying to me that it is a very bifurcated market. It is absolutely a split personality. So the technicals in the weekly and the monthly are still not that great in the IWM. It's got a lot of work to do. It's not even as attractive yet as the New York Stock Exchange, but it is acting quite well. And certainly today it's up at 1.18. That's 102%. That's way better than the S&P and the Dow. In fact, it's as good as them together. So that's what I'm looking at now. That also tells me that TLT has to be watched because we've never been in this situation before. The Fed might just say, hey, you know what? If ever we were going to do it, let's just do it now. And they might come to a consensus in 2 months' time for the December meeting. So that's saying, got to watch it closely. I don't think they can because I think I still see enough weakness that will be registered in the economy. That XLF is another reason why I prefer to be looking at what to buy on the next sharp decline, then, and as well as some shorts that might come down right now. So this is a mixed market. I do see limited upside. I see limited downside in time, in price. It might be time that we use up. We'll see. So Basil Chapman, stay tuned. You've got a great program coming up all day. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.